Hi everyone. So if you've ever worked in buying, merchandising, or retail planning, you've definitely heard the terms opening and closing stock. But I know from experience that a lot of people use them without fully understanding how they're calculated. So in this video, we're breaking it all the way down. What opening and closing stock actually mean, how they link together, and the exact retail math formulas that you need to know. So I'll do a whole whiteboard session so that we can fully illustrate everything to do with opening and closing stock. So what is opening and closing stock? So let's start with opening stock. So opening stock is simply the amount of stock you have at the very start of a period. Okay, so a period could mean a week, a month, or even the whole season. That depends on what level exactly you're planning at in particular. Okay, so opening stock is the start. And so the important thing to remember about opening stock is it's simply last period's closing stock. It's the exact amount that we closed with on the last period. Again, either week, month, whatever level you are planning at. So the formula for opening stock simply is this. Opening stock equals last period's closing stock. That's the formula. That's the formula for opening stock. It's as simple as that. Opening stock equals last period's closing stock. Then for closing stock, so remember closing stock is at the end of the period, and closing stock is the one that you actively have to calculate because closing stock is the stock you have left at the end of the period after you've taken into account everything that's happened. This is exactly the formula. So closing stock equals your opening stock plus your intake minus your sales. That's the formula for closing stock. So let's illustrate this out to get a better understanding of what this all means. So let's say you started the week with 6 items. And along the week, you made some sales. Let's say you sold 2 items along the week. And then further activity within the week was you had some deliveries and you got intake for 2 new items in stock. Let's say then as you progress along the week, let's say that you sold your 2 new items as well. So now let's analyze this all together and look at the activity that's happened within this week and understand it together. So your first initial 6 items that you started the week with, this would be your opening stock. And then the remaining items that we have here that did not sell, this is our closing stock. So we closed the week on 4 items. So the activity that happened throughout the week to determine the difference between that opening and closing stock is obviously our sales and our intake. So our sales was of our 4 items here. And then we had our 2 items new intake that got delivered throughout the week. And that's how we can analyze this information and know the difference between opening and closing stock and how we get to these 2 points. So if we were to now start a new week and we're opening a new period, we know that the formula for opening stock is last period's closing stock. So closing stock equals opening stock. And so we would open with our closing stock from last week, which is our 4 items that didn't sell last week. That now becomes our opening stock. Okay, so I really hope that this has been helpful and illustrated for you opening and closing stock. So what I'm going to actually do is just run through some of the major questions that you may have surrounding opening and closing stock. So I do know that you may want to know, okay, we know all of this now, but what is it used for? Okay, that might be the main question you'd want to know. And it would be in 3 main areas. Opening and closing stock would be very important when making buying and merchandising decisions. Okay, so the first one would be sales planning. And this is done in your Wizzy. Okay, so I'll actually would recommend you check out my full video on the Wizzy where I take you through the template and everything, and that template is available for download too. So if you click the link below, all templates are available there for download. Otherwise, you could just check out the video as well. But for now, I will quickly flick through to the Wizzy just to be able to explain opening and closing stock in particular to your sales planning in the Wizzy. So if we just take a quick look at this Wizzy here, we can see that our stock is listed here in this row. And this shows the stock all the way throughout the period. So again, like we mentioned, a period can be as small as a week, which would be this. It could be a month, which would be this, which is totaled up here. Or it could be a quarter, which is totaled up here. And then we have a half, which would be your full spring summer season. And then you have your full year, which includes your autumn winter season down here. So these are your different periods that you could look up your information in. But let's look at a snapshot as small as 1 week. We can see in week 1, this Wizzy has 114k worth of stock. And then when we progress into week 2, that formula is calculated for us. And it says that we have our last week's stock plus our intake and minus this week's sales. That is the formula that has been pre-calculated in here, which shows next week as 107k. Okay, and then that's how it's calculated all the way through this whole template sheet. So it's very, very detailed and robust to be able to plot in your sales figures and adjust. But how does this help us for planning our sales? Okay, so how this helps us plan our sales is we will know what next week opening will look like if we plot our sales in here. Because when you are planning out a Wizzy, you would plan your sales in your forecast sales uh, row over here, which, as we can see, has been filled out even for weeks that have not been actualized yet. Okay, so this is our current week. Sales have happened from week 1 all the way until week 9, the week in grey. And then these future weeks have not happened yet, all the way throughout the year. Okay, but we still have our forecast sales in these numbers. And that is because this is what sales planning is. We have said, look, this is what we think we will sell for these weeks. And that can be based on a number of things like, last year's sales. You've got your last year's data in there to help to reflect on and to help make decisions for the future. But we will know that we can make these sales only based on the stock that we've got available. And your stock will be based on your intake, which is also planned ahead of, which we can see here in this row. Our intake has been plotted in all the way through for future weeks that have not happened yet. Okay, so opening and closing stock will help us to manage these expectations, because we won't want to put heavy intake into a week knowing that we've already got a lot of closing stock from last week. And so you won't want to carry forward too much stock if we can see that our sales are perhaps not going to be a heavy sales week. We don't want to add on lots of intake plus lots of closing stock from last week and then create a problem where we're overstocked, right? So that is how opening and closing stock comes into play on your sales planning in your Wizzy sheet. Okay. Next, we have what else it's used for. We use it for markdown decisions. And this is also done in the Wizzy. Okay, so if we were to flick back to the Wizzy, okay, so if we're looking at the Wizzy regarding markdown decisions, we have our markdown in this row here. And we can see that for the most part, it's pretty clean, but we do come across some standard weeks where we've plotted down a markdown. And this would be where we know we are overstocked. Again, that would be based on last week's closing stock. So we would look and say, look, this is quite a high closing stock for last week. Then we've got some more intake coming in for this week. So we would know that also what kind of lines are sitting here. Is it post-Christmas stock that is not going to live through till spring? So we would plan a markdown here and we'll say, okay, now we're going to go into what's known as red ticket sales and take off that about 3,000 here. So that 3K will be written off in markdown. You would lose your margin on that and all of that kind of stuff, but it is to protect you from losing further later on down the line. Again, we've got 12K set to be marked down here. And again, that will all be based on what your closing stocks are looking like for the previous periods or weeks. Again, if we're looking at it for a full snapshot, if we're looking at a wider period than just a week, let's say we want to look at this whole half, the total for the half is over here. And we'd say, okay, the whole half has been plotted down for 15K markdown. And that is because we have 1.3 million in stock, and that is 70% back on sales. So we don't want to go into the next half overstocked and knowing that these lines are not likely to sell. So that's how we make markdown decisions based on our closing stock and then looking forward for what we're going to open with as opening stock. So now let's go back to the whiteboard. Our last key thing that it's used for is cash flow. That is done on your OTB, and I would recommend you checking out my OTB video where I do explain open to buy, because if all of your cash flow is stuck in stock that's sitting on your shelves, you do not have enough to buy more stock to refresh your shelves, and you're kind of stuck in a square, because you cannot create any newness for your customer to keep the sales ticking along, and that can create some problems for you. So definitely check out OTB if you would like to know more about that. Right, so I will give some examples to help illustrate. So the first example I'll give is, for example, if we had opening stock was 8 units. Let's keep it really small and just say we're looking snapshot for the week in a small, very tiny department. And then our closing stock was 3 units. Okay. And then that's example 1. And then let's say example 2 was we had opening stock was also 8 units, but closing stock was 17 units. Okay, so these are the 2 examples that we have. So for the first one, our opening stock was 8 units. We closed with 3 units. What that tells us is our rate of sale is very high. We're moving sales quite quickly, which is good, but that would tell us we need intake now. So we would need to go and reorder, or even look at our future delivery schedule and see when is our next intake coming. Hopefully it's coming next week. Or if not, that's when we start dealing with our range plan, making reorders with the factory to make sure we are well stocked based on this high rate of sale. Then our second example, we have opening stock of 8 units and then closing stock 17 units. So what we would see here is that our rate of sale is on the slower side. It's not where we want it to be. We want to be fairly level, and maybe we took delivery in this week. We had an intake that did influx our stock units, but still we want to also be selling through our intake as it's coming in. So we don't want to be closing so far off from the units we opened with, okay? And so this is just an idea of how opening and closing stock all works. And, always remember when we're dealing with stock, that can be either in cash or units. And so you can refer to your opening stock in units, as we've done here, or in cash value, as we would usually do on the Wizzy. But either way, I hope this has been helpful. And as always, drop a comment with any of your buying and merchandising questions. So if you would like more insights and run through anything else. Thank you so much for listening.